Even though New York City's benchmarking deadline was moved to August 1st, there are several things boards need to be aware of. Can you help us understand what those things are?
Yeah, first to actually clarify, in this case, unlike prior, we'll call deadline extensions, they didn't exactly extend the deadline. What they said is, we won't penalize you if you don't file until August 1st. So what happens is when you don't file, every quarter thereafter, you get hit with a $500 fine. So what they said is, if you don't file by May 1st, and you still haven't filed by August 1st, we won't hit you with the penalty.
I see.
So technically, they aren't extending it. So what will happen is a letter will still go out to the building and to the management company saying, hey, you didn't file. So, we've alerted our clients to that. So if they are comfortable with delaying submission, they don't get shocked. Hey, why did we get this letter? What's this about? So
okay, good clarification.
The advantage this year of the advantage though of delaying allows a management company or board to gather more precise information about their building, about their energy usage, about the characteristics of the building, because this is a year letter grades are going to be based on, and moving forward, eventually 2024 carbon tax. So we've been working with all of our clients to really tighten up that data gathering. And those that, now with, with this pause and people working from home, et cetera, and a lot of other distractions, this will allow extra time to do that data search better.
And can you just give us an idea of what that extra data gathering is?
What it is to get more accurate in terms of the building measurement, breakdown of residential space, ancillary space, garage, basement, retail is important, et cetera. Because when the city does their calculations for both the letter grade and eventual carbon tax, what space exists and doesn't exist matters in the formula. Also, if you understate or overstate the size of the building, in general, it's going to sway things because it's a ratio of energy usage in a simple way, energy usage to building size. And for the first many years, building managers, owners, boards, consultants, et cetera, it's like, all right, Department of Finance has 80,000 square feet. No way that's right, but just use it anyway. Who cares? Now it's going to matter. So what we're doing with our clients is since late last year is working more closely on getting that as accurate as possible. And this extension, not so to speak, gives us that a little more time to be able to do that.
And could you just briefly say, when you say getting it more accurate, does that mean hiring an engineer to do measurements or an architect or what?
So what will happen eventually in 2024 is an engineer, in addition to whoever's doing your benchmarking, an engineer is going to have to sign off that the information input is accurate. Right now, again, at this moment, it's really affecting it will affect letter grade. But also you do want to know if you're facing a carbon tax, so you could do some planning in advance. Architects are capable of doing that. Some engineering firms are starting to offer that service. But also many managers have their own capabilities of being able to measure accurately.
And what about the data that I know goes into this from Con Ed and National Grid? What is that good data?
So the first few years, there were no automatic uploads of utility data from either Con Ed and/or National Grid, and they where there was from the Water Board. Starting, I think, about 3 years ago, Con Ed and National Grid rolled out this automatic upload, just automatically. And what we found 3 years ago was the data was missing a lot of accounts, et cetera, et cetera. They had to work through that. I think 1 year they did an extension because of that data problem. This year, and every year there's a situation. This year, what happened is when Con Ed released their uploads at the beginning of the process, they left off, in many, many, many cases, they left off the last billing period, or the last period of 2019. Meaning, in Con Ed's case, usage would be understated. Now, in a cute way, well, that's great. That shows we used less usage, and therefore we have a better score. But it's not accurate. At some point, you're going to be tripped up because you could be audited. Or come 2024, you're relying on some bad data, and all of a sudden you're shocked because the engineer comes in and says, no, this is wrong, and we need to do a carbon tax. You're going to have to pay a carbon tax you weren't prepared for. In any event, National Grid situation is kind of the opposite. They combine their gas, the heat, and cooking gas accounts. And in many cases, what they went and did is put the heat account in a couple times. So overstated energy usage. Problem is that we alerted both utilities and the city at the time earlier this year, but they didn't make an announcement to the industry saying, hey, don't use this data. We're working on a fix. And for the most part, it's fixed, not entirely. So many people who do their benchmarking for themselves, and even many consultants, either not realizing it or being cute about it, are using wrong data. So you may want to go back to your consultant or person who did it and said, take a look at that Con Ed input you just did. Did it include 12 months? Did it seem accurate to you based on prior years, etc.?
Let's just talk just briefly about 2030. So there's lots of chatter that you really should look to 2030 and you should be getting yourself a situation. What are your thoughts about that?
Okay, good, very good question. What we found in terms of 2024, buildings should now make themselves aware, again, either through consultant or in-house, however they do their benchmarking. They should make themselves aware now, based on current usage, current situation. Are they facing a tax in 24? And then again in 2030 when it becomes even stricter. We found when it comes to the multifamily world, less than 10% of the buildings are facing a penalty in 2024. And the ones that are, in many cases, it's not significant. And more so when we correct data, like we talked about earlier, we see that carbon tax goes away. Mm-hmm. So if your calculation is showing, hey, you're going to owe a tax in 24, take it with a grain of salt, take a couple of steps, take a look at why and what the significance is. 2030, though, the city has really upped the bar in terms of reduction and so on. But it is far out. And the rules themselves haven't come out yet because according to the law, you'll be able to buy green energy if it's sourced in New York, blah, 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 and all these other ways of reducing your carbon footprint, not necessarily doing any structural change to the building or major investment. But we don't know that yet. And it's literally 9 years away, 10 years away. So I wouldn't overreact yet. I'd make myself aware what could be coming. But so many things in the next 10 years on the legislative side, the rules side, green energy markets that currently don't exist for this purpose, may reduce or eliminate what you think is going to be your tax. That being said, when making capital improvements that relate to energy, as part of the payback analysis, the return on investment analysis, building managers should be aware, and boards should be aware that the carbon tax is a cost. So, hey, if by spending an extra $5,000 on a better, so to speak, boiler, I'll save money on usage. We calculate that, et cetera. But now factor that in. Hey, will this lower that carbon tax? Because that's another savings. That's another benefit. So I would not rush to do anything because of that. I'd be cognizant of it right now. And again, every improvement that you do, make that part of the payback.
Okay. Thank you very much. Much appreciate your time.
You're welcome. No, thank you, Carol. Thank you as always.